Good evening, everyone, and welcome to this Altcoin Strategy Part 1 Q&A. I hope you are all doing good. I hope you all had a great day of trading. And please let me know if you can hear me. Before we begin, it's also important to note that everything I'll be covering tonight is no financial advice and for educational purposes only. Scott is in the house. Hope you're doing well, my friend. Sounds good. Thanks for the confirmation. So, I think today's Q&A is going to be, fairly short, since some of the questions are exactly the topic of part 2 of my altcoin strategy, and I don't want to spoiler too much, so I can touch on a couple of things briefly, but you're going to see your questions being answered in my part 2, much more in detail. So, first question is from Melmac. Great info, Severin. Question at 10:51. Can you please go into more detail regarding limit feature on Bybit to determine position size required to uphold a 1% portfolio risk? Cheers. So, what I personally always do, and that is part of my preparation when I look for an altcoin setup, is to familiarize myself with the approximate position size I'm going to use on that specific asset. So as we all know, prices are very different across all altcoins, so it might be that it is going to be that your position size is going to vary very much. So it might be that on some altcoins you're going to trade, let's say, 1,000 units of this altcoin, and on others, let's say Ethereum, for example, you only use 10, for example, okay? So for me, that's always part of the preparation, because what I want to prevent myself from, or a situation I want to prevent, is that I see one of my alerts going off and I am not that good prepared that I don't know my position size for that specific asset. So what I do is I go over to TradingView. So let's say in this case I want to use the example of Mask, and what I'm going to do here on paper trading is the exact same thing you can do on Bybit, for example, but it's a bit easier to do that on TradingView. So let's say you identified this level right here on Mask. We have a point of control, we have a weekly level. Let's say you missed this trade and your aim is to enter on a retest. So we can hide this. Let's just say your setup, this is no financial advice, by the way, nothing I would trade myself, that is just for the sake of this example, okay? Let's say your entry or your planned trade is going to look something along this sort of lines, okay? There you have the CC retest lining up with the weekly, actually pretty nice, bit of liquidity here, okay? That is your planned trade. But, so when we look at this, so Mask is trading at $3.45, okay? From the top of my head, I don't know the position size I would use in order for me to uphold a 1% portfolio risk. So let's go with an example of a $10,000 account. Okay, so $10,000 is your account, and 1%, not too difficult, is $100. So that is your risk. Okay, that is something to keep in mind. And what you want to do, or what I typically do, is just use this limit feature right here. So we can type in the entry, for example. Entry price for the limit is going to be 3.6, let's call it 65. Okay, oh, sorry, didn't mean to press it. Let's do it again. 3.65. Then I'm going to calculate my stop loss. So my stop loss is going to be, let's call it 3.9. Take profit is going to be down here, or let's just call it 3.1. And now what TradingView already calculates for me, so let's say in the beginning it's just set to 10, for example, then you see your account risk, so that is your stop loss. If your stop loss is triggered, is $2.50. your potential reward is $5.50. So that is fairly small. What I am going to do is just, yeah, play with it a little. Let's see if I use 500 contracts. Why is it not updating? Let me see. So we have to do that again. Let's see, market, sell, 500, stop loss, 3.9. Now you can see that is already above your accepted risk. So that here you can see if you use 500 units, that is $125 loss. So I would approximate it and say 450. Still a bit too much. Let's call it 425. So I played around with it a little, and I will now note down that if we get to my entry, my calculated position size is going to be 425. That is, in my opinion, the most efficient way. Because let's say I set an alert here, price reaches my level, I'm busy doing other things. So I'm busy reading order flow, I'm busy reading the reaction, looking at the reaction, checking confluences with Ethereum, Bitcoin, for example. Okay, so I don't have the time to then spend more time calculating my position size. So that's why I do this in advance. And that is, yeah, the whole theory behind it. Not too complicated, actually. But I like to do this. You can do the same thing on Bybit. Let's now have a look at the next question. Go over to the PowerPoint again. Hey Severin, can you detail a bit more in trade execution? A close of a 30-minute candle with bullish bearish order flow of confluence. I really enjoyed your video, but was left wondering the details of the execution. Thanks, mate. So yeah, the thing is, in my altcoin strategy part 2, I'm going to cover my different entry strategies. Okay, so there's a full lesson on this. That's why I don't want to go too much into detail into this. Okay, so there are a few different entry strategies I use when it comes to trading altcoins. I personally like to keep it very simple. So I don't like to overcomplicate my entries. When it comes to trading altcoins, most of them are based off a candle close. Okay, it always depends on the type of trade you're taking. If it is a swing trade, I personally like to wait for a 4-hour close at least, but I prefer to wait for a daily candle close. Okay, but that is something I'm going to cover in the next lesson. But the entry strategies I use are limit orders, candle closes, market structure change, that is more of a conservative way, or a CCW entry, which is also more of a conservative entry. And when I'm day trading or scalp trading, that is the only moment where I utilize order flow based entries. So what you can already see is that most of my entries are not even based off order flow. That is also something I'm going to cover in the next altcoin strategy part. So part 2, where I'm going to delve into the importance of using order flow when it comes to altcoin trading, or at least what I do. Okay, so yeah, wait for part 2. Free energy. Hi Severin, you don't seem to be analyzing the Bitcoin pair with the relevant altcoin. Is this not of interest to you? Do you use it at all, or you are going only by the alt USDT? Thank you. So that is also something I'm going to cover in the next lesson, but it's something I can touch on already, okay? So sometimes I do look at the BTC pair, and I use this to make my entry a bit more precise. I'm going to give an example for this. But I specifically use this when 2 setups are close by. Okay, we can go over TradingView. I found a good example for Cardano. So when we look at Cardano, we can see the following. So I think there's, yeah, it's not too important for the sake of example, but it's interesting to see there's also a point of control here at this resistance zone. So we can see we have a naked point of control here at this level right above. We have a weekly on Cardano, and we can see not too far away, there's another weekly on Cardano and a naked weekly point of control above. Okay, so when we look at a CC, for example, pulled from this high to this low, we can see that's also lining up with the CC. Okay, we already had a rejection here, but still that is a, yeah, that is, if you look at the price location I mentioned, this is a good place to look for a short trade. Okay, so now I am left with two potential setups. So I could either look for a short trade here on the first level of resistance, being this daily naked point of control and the weekly level. So this is also, just for the sake of example, it's not a trade I decided to take yet, okay, although it's a nice level. Okay, so this is one setup I could be looking for, and the other one is this confluence area above. Okay, so I personally utilize the BTC pair when I need more clarity on what is the better level. So where am I more interested in taking a trade? So let's say at my first level of resistance, I already get a good reaction. Is that lining up with the BTC pair? Because I have some other confluence right above. So what I don't want to see is that I get my initial reaction and then price takes the next level of resistance. Okay, then I probably get stopped out of the first trade and I could potentially re-enter here. But what I do sometimes is to utilize the BTC pair, for example, and look what this chart is showing me. So what's interesting to see is that when we compare both, we have been front running some nice levels. So if we look at this, that was a front run of the weekly, which is very close by. We have a naked point of control right above. Okay, so same here on the BTC pair on Cardano. We can see we had a very slight front run of this weekly. We already rejected this value area high. So what I would, the conclusion I would get from looking at the BTC pair is that the more imminent resistance is a bit more interesting for me on Cardano. So when we look at the BTC pair again, we can see it could be a scenario where we reject or where we backtest the value area high before we continue to the downside. Or even if we hit the weekly, make an SFP, and then continue lower, that is lining up with Cardano taking the first level of resistance, only giving us the SFP of these two highs, but not going too deep into the other levels, okay? That is how I would use the BTC pair. What I will say though is that none of my entries are based off the BTC pair. I always look at the USDT pair to base off my, so to use it for my entry, to use it for my stop loss, to use it for my take profit. I only refer back to the BTC pair if I need more clarity or yeah, sometimes for additional confluence. I know that you can also trade off the BTC pair. That's just nothing I personally do. That also comes down to your personal preferences. If you say that you like to look at the BTC pair, it's definitely not incorrect. So I also know, or most of you know, Daniel does it a lot. So he looks at the BTC pair a lot, but I personally get the best results from looking at the USDT pairs. Okay, so that is all I can say about the BTC pairs. I'm also going to touch on this very briefly in part 2. So if we look at the last question from Mooney. Hello Severin, why is the .75 a trend reversal? I see Igor use it too as a trend reversal. Is it not so that when the price is going beyond the .5, it will continue its direction? So for this, I think it's best to go over TradingView again. And let's clean the chart. So, in my opinion, the way you want to look at this and the way you want to look at the level price retraces into, What I always like to keep in mind is the risk to reward. So if we, let's see, I think that's going to be the CC. That was the CC. I'm trying to find a .5 rejection. That's what you refer to. That is a nice .5 up here. So the way we want to look at this is this as a range. So whenever you pull a Fibonacci .25, for example, what you're basically doing is dividing this range into 4 quarters. Okay, so let's say, or what you're saying is that once price gets above the .5, would we not typically expect continuation of the trend? Okay, the way I look at this is a bit different. So if I expect a rejection at the .5, where would my stop loss be? If we look at this as a range, our stop loss would be above this high. Our entry would be at the .5. And our take profit 1 has to be below this low right here. So what we can see when we look at the risk to reward tool is that we not even get a 1-to-1 risk to reward ratio. So in my opinion, that's really bad in terms of risk management. So the way you want to look at this for your best entry and to maximize reward is to look at a .75. I mean, you can, or I personally look at everything in between the 618 and the .75. Okay, so everything in between there, in my opinion, is an acceptable retrace. We can see that here, for example, that was the CC. But if we look at this, so let's bring up the CC, we can see a nice rejection here. That was our entry. Let's say the 6.6 is our entry. This is our stop loss. And if we take this trade, our target would be a new low. Okay, then we can see that is almost ensuring a 2-to-1 risk to reward ratio. So in terms of risk to reward, that is already a lot better than looking at the .5. If we now look at this with the .75, we can see, let's say that is our entry. We have a tighter stop loss. That is our take profit 1. We can see we are at a 2.8-to-1 risk to reward ratio. So this is very much increasing your risk to reward. So in terms of, risk management, that is the best place to enter, in my opinion. I personally wouldn't say that once you get past the .5 that this signals trend continuation. So what we typically see is a rejection if we look for a retrace between the 618 and the 7.5. That, in my opinion, is the best level. Once I personally see some value and candle closes building above the 7.5, that's when I am personally a bit more conservative and think that it's more likely to take the high again and quote unquote get that trend confirmation. Okay, so what I personally always keep in mind is if we reject here, for example, in my opinion, the symmetry looks all right. That is okay. It's not too close to this previous high. But if I now see structure being built up here and then I see a reaction or a rejection, that is when I would say that is very close. There is some resting liquidity up here, and this is when this becomes a target for me. I wouldn't class it as such if we reject the 7.5. Okay, I hope that makes sense. So going past the .5 is not signaling trend continuation for me personally. And from my experience, also looking at the statistics, that's typically not the case. So yeah, it's very rare that I would enter at the .5. This is in the middle of the range, so this for me is a take profit, but this is not a place I would look to enter a trade. Okay, so I hope that makes sense. And that is already all the questions covered for tonight. So as I already said, I already knew that's going to be a quick one. If anything comes up then please tag me in the chat. We can look at any questions that might come up. And yeah, I hope you all enjoyed, and I'm looking forward to releasing part 2. That's going to clarify a few questions that we had tonight as well. So I hope you all enjoyed. See you all next time and have a great evening. Goodbye.